Hello everyone, I'm back. This is the second video in a three-part series comparing swing trading versus day trading. In the first video, we talked about the enormous profit potential in trading stocks and ETFs. Talked about which type of trading is best, day trading or swing trading. We're trying to answer that question. And to do that, we first define swing trading and day trading. Basically, swing trading is holding a stock for more than one day, from 1 day, 2 days to a few months. Day trading is generally trading in and out as a retail trader within the same day. Okay, we also talked about the time needed to become a successful swing trader and day trader, and how much time is needed for both once you're consistently profitable. We talked about things such as a day trader, you have to be there at least between 9:30 and I would say 10:30 to 11:30 every day, because you have to be there while the market's while the market is open. Enter, exit, and manage those trades. Okay, whereas with swing trading, a lot of systems, including our own, you can actually buy and sell stocks after hours, in the sense that you can go and enter your order to buy or sell before the market opens the next day. Okay, and that's a common thing that swing traders do, and that's why a lot of people start with swing trading, because they don't have to give up their day job to start trading. So okay, in this video I'm going to talk about the stress and or excitement levels of both day trading and swing trading, and also the risk levels of both swing trading and day trading, and also some success tips for both from an expert trader. Okay, I'm going to talk about the stress level. First of all, with day trading. With day trading, everything happens very fast. You've got the price moving constantly up and down. A lot of people, to make money, they want to trade, the gaps in the morning or in the first hour of trading, and that's a very volatile time generally in the market, and prices are moving very quickly. Okay, and so you have to come up with the entry point, your stop loss, your target, how you want to scale into the stock, how you want to exit the stock. Come up with your complete strategy for trading that stock right away. Okay, and you often only have a minute or two or less, sometimes 10, 15 seconds to really come up with the strategy, figure out whether that trade is really one you want to get into or not, whether it makes sense for you or not, and go ahead and fill out your order and get going on the trade. Okay, so it's very, very fast paced. Okay, and that can be addictive in a sense, because you have immediate consequences, and it requires such urgency on your part to enter and exit trades that it's kind of a rush. So you have to be aware of that, and you need to master your emotions in light of that, because it's very like I said, it's very fast paced, and you have to be on top of your strategy and almost be unemotional about when you act, even though it's a very stressful situation. So that's day trading. Now with swing trading, you do have more time to analyze company fundamentals, the price charts, and decide on your entry and exit strategy. So imagine instead of having to be there between, say, 8:30 and 11:30 a.m. every day, and giving up your day job, imagine keeping your day job and coming home from work at night, looking at price charts, looking at any information you want to about the company. Look at your targets, the technical levels, the support and resistance levels, the different ways of trading that stock, and seeing which one makes sense, if any of them make sense, if you like the trading opportunity or not, and taking all the time you need to do that. And that's a benefit of swing trading. You can do that at your pace, and which is great, and it's really good for new traders. One of the things about swing trading too is that there's, like I said in the previous video, you do have fewer factors to consider, in the sense that with day trading, you have multiple time frames that you want to look at. So to really be a good day trader, you need to master swing trading in a sense. In other words, look for good entries on a daily chart, on a longer term time frame, and then look at short term charts of the past few days to intraday charts to find a situation where all the price trends are aligned and hopefully there's multiple patterns on a daily chart and price patterns on an intraday chart that are bullish in the direction of your trade, or bearish if you're shorting or buying put options. So in that sense, day trading has more factors to consider. You also have to worry about, what the market's doing that day. If the market's going against, what you're doing that day for a day, that can maybe not impact your swing trade over the next week or two, but it will more likely affect a day trade in many cases when that overall market's going against you, because you're in and out that day, okay? So there's a lot of reasons why day trading for most people is more stressful, but it's also more exciting, and you might enjoy that more. I can tell you, for most people, they're not going to enjoy it, at least until they become good, and it takes a while to get to that point with day trading. Okay, let's talk about the risk levels of both now too, to compare them. With day trading, like I've been saying, it just takes more skill, more time. You have to act quickly. You have to have the right software, and it has to be set up properly. And you have to learn that, all the different keys and all that. You have to be able to navigate through your trading platform very quickly, so you got to learn all that. So as a newbie, it's much more risky in the sense that you'll probably lose money. It's very likely you'll lose money day trading until you develop the skill set, until you really master a good strategy. Best thing you can do is go with a simulator for a while and master that first. Once you go from a simulator to live trading, though, there is the added impact of, oh yeah, I'm using real money now, so I gotta be more careful, and you start, the doubt and the emotions start creeping into your decisions, and that can cause you to do poorly too. So there's more risk with day trading as a newbie until you really master it, which usually takes months to years. Okay, but once you do master it, once you become really, really good, I would say it's probably a little less risky. If you can, prove to yourself month after month that you can make money on every week with day trading. Because once you get to that point, you've proven beyond a shadow of a doubt that you are very, very good, because you've taken on so many trades. With day trading, you take on a lot of trades per week. And so if you're winning week in and week out and week in and week out, that's absolute proof that you are very skilled and you are able to make money consistently. It's statistically more significant, and you just know that you can make money day trading. Okay, so later on, I think it becomes a little less risky in a sense. Although with swing trading, you can go through the same thing, same process, and over time you can see that you're doing very well consistently and have that same level of confidence. But that level of confidence can take more time just because you take fewer trades in the same amount of time, if that makes sense. Okay. And of course, day trading is risky because you risk your day job. If you're starting to do it at work, that can risk your day job, and it's not a good idea. And also, because you're in such a hurry, you have to make quick decisions. You're more risk of making a bad decision, hitting the wrong button. You only have seconds to act instead of hours. And the bright spot, though, as far as risk goes, too, with day trading, is that there's no overnight risk. Okay, so you don't hold stocks overnight. So there's always a chance, if you hold a stock overnight, that a news item comes out about the company, and the company either goes down or up. The price of the stock goes either down or up in the opposite direction of your trade. So with day trading, you don't have that risk. So that's one of the bright spots. However, if you're trading with the market trend and you have fundamentally very good stocks that you're trading, and you have a good short-term trend and a long-term trend, in general, those overnight news items will work in your favor and not against you. Keep that in mind too. Now with swing trading, less risk in the beginning because there's just plenty of time to figure out what you're going to do, at what point do you enter, does the risk reward make sense, do you have that 1.5 to 1 or 2 to 1 or 3 to 1 risk reward ratio, whatever your standard is. You can make sure that you have that and have plenty of time to figure that out, instead of just 10 or 15 seconds. So it's, less risky in that sense, because you're making sound decisions because you have plenty of time to make those sound decisions. You don't risk your full-time job as long as you resist the temptation to check your stocks during the day while your boss is in the room. So there's less risk with stop-loss orders. If you do use stop-loss orders, that does reduce the risk. However, stop-loss orders generally will reduce your results in most markets. That's been proven in studies. It will smooth out the results over time, and it does reduce that risk. Now, there's some markets where stop-loss orders do work well and do improve results. If the market's going to be very volatile and you're swing trading on a slightly shorter time frame, so instead of 4 weeks of holding a trade, hold it for a week or two, those stop-loss orders can help your results over time. So, okay, but you do have the overnight risk of holding the stocks. But again, if you're trading in the market direction, if you're trading in the long-term and short-term direction of the stock itself, those overnight risk factors that emerge oftentimes work in your favor, as that's been my experience, and they work out in your favor a little bit more often than not. So, okay, so that's a review of some of the risk factors of the most important risk factors of both day trading and swing trading. Now, here's some more tips for you for getting started. Whether you're day trading or whether you're swing trading, one thing is you have to really understand more than anything is support and resistance, trend analysis, and chart patterns. Those are three key areas you want to focus in on and really master. That will be very helpful over time. There's some trends and some patterns that work very well over and over again. They're not 100%, of course, but they're very, very good at putting you on the winning side of a trade. And of course, support and resistance is probably the most important thing you need to understand and learn. Both short-term support and resistance and longer-term support and resistance. Okay. So for day trading, if you want to go that route, you want to get the best online broker and a great trading platform along with multiple monitors. You'll need them. Okay. And don't go in and think it's easy to be profitable over the long term with day trading, especially. You have to be disciplined with a good strategy, and you really have to develop the skill with day trading. It's not a simple thing to master, and you have to really take the time to learn a good strategy, practice trade a lot, and then make the transition into live trading. I think for day trading, that's what you need to do. Another tip is to start with swing trading. Start there. A lot of the same principles that apply to day trading also apply to swing trading, just on a longer time frame. And you have plenty of time to make those key decisions. And later on, if you want to get into day trading and do some of that too, you can always keep the swing trading as an option. There's no harm in having a swing trade in play, have one position on for a week or two or 3 or 4 while you're day trading, gaps on the market open. You can do both. Okay, and a lot of money to be made in swing trading. It's a tough call to say whether day trading is more profitable than swing trading or vice versa. I think for most people, swing trading will definitely be more profitable, but I think even for experts, I think swing trading in many cases can be more profitable. So it's always an option. It's not one or the other. You can do both. If you have a full-time job, obviously you can't do both. If you have a full-time job, you want to keep that and make sure you're a proven trader before you make that change to go into trading. So start with swing trading and then start learning from an expert. Okay, we offer a free blog and a trial to our trade alerts, and you can follow us as we make these swing trades and my analysis of each stock, the charting, the overall market analysis and the trend analysis and the overall market. That's very important too. You can see all that in real time, week in and week out, with our weekly alert and daily alert, and that's very helpful too, to learn more about swing trading and becoming successful over time. So, okay, now next video, got one more part to this series. I want to talk about the hardware and software that you'll need for both day trading and swing trading. I'll get into more details about that, and the profit potential for both swing trading and day trading, and more tips for succeeding at both, and how to get started on that path to becoming a master trader with limitless income potential. And that's what we all want in the end on our journey. So hopefully you'll be listening to that and learn more, and I will see you in that next video.